Today's video is on Pioneer Natural Resources, PXD. It got taken over today by Exxon. I'm not sure what the news is around it. It just got a takeover bid. I heard it was Exxon. To me, doesn't matter. I was just going through my portfolio and I noticed what was up and down. And I see here that SHY is up 2.4% on a generally flat day. When we're up 0.48% on a flat day, because if you look at the market up top, you'll see that the market was only up 0.10, Nasdaq's up was down 0.3, and the Dow's up only 0.3. So I'm looking through and I'm saying to myself, why is SHY up 2.5%? SHY we have about $10,000 in, and we're down 2% on our cost basis. So I saw that, I'm like, well, I'm down on my cost basis, so that's something I could add to. Maybe I could put another 1,000 or 2,000 in it. Okay, so what does SHY have to do with Pioneer Natural Resources? Okay, Pioneer Natural Resources, I was going through, I was, wanting to maybe add some more to SHY, and then I noticed when you look at SHY's top holdings, you'll see here that Pioneer Natural Resources is one of the third or fourth largest holdings of it. So, it's not a huge percentage, but it is over 1%. So I think that's why SHY bounced today. I mean, not only is it, because look down, everything else is a much smaller percentage of the portfolio. So not only is it a part of SHY, which is a Calamos fund, yes. Not only is Pioneer Natural a part of that, it just looks like a good time to be in SHY, Calamos. As I click on SHY's chart, you'll see that, look, it's at the lows on a 5-year chart. On a 1-year chart, it looks like the perfect low end of the range. It has an 11% dividend, it says on E-Trade. Double check on that and do the math to be sure. If you go into the charts, the long-term chart, you'll see that SHY is at a perfect low, it seems. 10 is the low here, 10 in October, 10 in July. It's like a triple bottom. And the MACD is crossing. That's what you want to see. Every time the cross comes, you get a move higher. And the RSI is moving higher and coming off oversold levels, which is always a positive. Oversold. The oversold levels correspond with crosses in the MACD and bottoms in the chart, if you look at it. Just go analyze that on any stock you come across. And then there's a lot of buying volume in SHY today, probably because people recognize the value of the holdings it has within the fund. Again, Pioneer Natural Resources is one of the top holdings. Now, if you want to know what SHY does, it does convertible stocks. So it'll do convertible bonds. It'll take that dividend, and in exchange for a steady dividend, it doesn't really get the stock, but it can be converted to stock if it needs it to be converted. So your convertible security can be converted from one asset type to another, such as a convertible bond that may be converted into a common stock. So they can convert Pioneer Natural Resources into a common stock, I believe. So however it works, to me, it doesn't really matter. Convertibles, stocks, that's where the proof is. It's in the pudding. Here's SHY on a $10,000, a growth chart from Morningstar. That's pretty much in line with the S&P. The S&P made 40,000. I'm always looking for things that can give me more daily gains, such as the gains that I got today, because I know that Cornerstone is going to be flat a lot of the times. See, Cornerstone 0% there. It was up. The other fund, CLM, was up 0.64 on a flat market day. That's nice. But if you look on a chart of Cornerstone, it's always going sideways. You saw that on the last video. So to offset this sideways move that is not a capital gains vehicle for the long term, you have to sell out before the rights offering. I like to balance it out with things like SHY, other market correlated funds that move upward, left or right on the chart. And so this one moved upward, left or right on its chart, as you can see, from 750 to 15. I don't know if it'll get back to 15 because 2022 was a rough year. As you can see on a max chart on SHY, it never got back to 08 highs. So when you look at it on a max chart here, on the custom chart, you'll see in 2008, it was at a much higher price. And it never made it back to those highs because perhaps because the convertibles, weren't converted at the same prices, or I don't know, maybe they underwent a new structure change like many funds did after '08, but this seems to be the new high after '08, which is 1250. So we briefly made it past 1250 there, here, and then 2022 before the top. So it looks like 15 might be reached again, but 1250 is generally the range that you're going to see here. 1250. So we're about 20% off of that. If you go from 10 to 12, that's about 20%. So there's potentially 20% upside in this fund, plus a 10% dividend. So that gives you a 30% return in a year, and that's not bad. In 3 years, that's almost a double of your money. That's 90%, and that's how on Morningstar, it showed you that it made 38,000 over 10 years, because on 10,000, that's almost 200% on your money. 10,000 to 20 and 20 to 40. So that's how it's happening. You get 20% gains per year and a 10% dividend. Also, it's 4-star, if you noticed. 4-star. You know, I love to own top quality funds. On my channel, I also want to say that to all the new subscribers, that I don't promote margin here. I just want to get that clear. I'm not saying you need margin to invest in these funds. You should just invest in these funds regardless, with or without margin. I only use margin to get ahead a little bit. You know, people need to use loans to get ahead, not to stay in the same spot, but to get ahead. I use margin. If I had a job, maybe I wouldn't use the margin, but I don't have a job, so I have to use extra loans to get ahead. And I would think that if you had a job, you would want to use a little bit of margin to get further ahead than you currently are. You can be making 2 paychecks, your job's paycheck and the paycheck from your brokerage account, and then you use your margin to just juice that paycheck a little bit from your brokerage account. You know, if you think margin's risky, I was going to make a video tonight on margin, solely dedicated to margin. I made a whole video today, and I just didn't publish it because I don't know. I don't want people to think that I'm all about margin, and I don't want to lead them off a cliff. Okay. There are techniques to using margin, and I employ them judiciously. You know, many funds use leverage, including Shy. I saw on their website they use about 30% leverage. Many of these funds use leverage. I'm not at 50% leverage. I'm not quite, I mean, at 1-for-1. My account's at 350 and my leverage is at 258. So I'm not very highly leveraged either, and so I manage my portfolio kind of like a fund manager would. So they use leverage, I use leverage. How do I deal with that? I have put options that protect me in case the market sees a catastrophic drawdown. I have put options on. I also barbell my positions to where I have the larger amount of in the higher quality positions, a larger amount of money in those, and then the riskier plays, it tails off like a bell curve, and to where whenever I need to raise margin, I can just sell from these for minimal losses because I don't have much money in them. So they're just like a release valve. They act as a pressure release valve, and anytime the market's getting a little dicey, I can just sell from these lower rated funds that are a little riskier. That's why I have a smaller amount in them, and I won't lose much income in the process either, because I had such a small amount in them. So this income should, you know, stay pretty high if we sell from those bottom funds. My margin's down to 260. It'll be down to about 230 pretty soon, because I'm going to take on that loan I've been telling you about. I get loans because I have the dividends, and that's how I also use my margin. I know I'm bringing in loans, so I'm always in talks and trying to get loans from anyone I can so that I can get ahead of margin calls. If I can make this cushion high, then essentially it doesn't matter how much margin I have, because I'll never get in a margin call. The only other thing to worry about after that would be interest. And if my margin's at about 200 grand or 230 and we're at 5% interest, it's not really costing me much to hold that margin. So if the interest is low and the equity up here is high, this available withdrawal, not my net account value, that's purely ego. You don't care what that does, up or down. You can't do anything with that. The banks don't care about that. They'll never use that to qualify for a loan. You worry about this number, the available withdrawal. When that gets to 0, you're at a margin call. I'm not promoting margin. I'm just telling you how I get my performance, okay? You should still buy these funds without margin. Shy, Calamos, why not? It's a 4-star fund. It moves upward, left to right on the chart. Pretty safe. You know, so it's one of my favorite plays. I've owned it for a long time. Thanks.